You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. What the heck is trading it up over there on CME Group this week? Well, we're going to find out. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, ever insightful, at least we tend to think so, Options Insider Radio Network. Welcome to all the new folks who've been joining us over there on the on-demand side and, of course, on the pro side as well. Big influx of those over the last week. Welcome to all of you folks. Remember, of course, head on over there. Theoptionsinsider.com/pro gives you access to that exclusive pro podcast feed. You can check out the great pro Q&As like the one we just did yesterday with the flow master himself, Mr. Henry Schwartz, breaking down all of the interesting options flow. What's going on with all this explosion of dailies and equity options out there like the S&P? And it's insane. 40% of the volume in SPX now is dailies, one-day trades, zero DTE, all the rage. What the heck is going on? What are people up to? What are they trading out there? Is it all premium harvesting? Are they doing something else? Well, we have all the answers over there on that pro Q&A, as well as pretty much close to 100 others, as well as almost 100 other options oddities episodes. You guys get all that fun stuff. You can participate in all the upcoming ones. Of course, great giveaways were coming up. It's the first now, so it is official. The cutoff has been marked. Everybody who is active on the pro for November, you guys get your hat automatically put into the ring for the November Pro Trading Crate. If you want to see what's in them, just check out Twitter. Folks are having fun and tweeting about all their goodies they're getting. There's no small effort and expense for us to put those together and send those to you, but we like you folks. So get on over there. Theoptionsinsider.com/pro also gives you live access to this, every other show we do throughout the week, and a whole bunch of other fun out there. And speaking of fun, who is joining us in the FTSE Russell and CME Group hot seat today? Well, he's, dare I say it, the funnest, to coin a phrase, guest we have here on the show. None other than Dan the Man Gramza from Gramza Capital Management. Dan, welcome back to TWIFO, sir. It has been too long.
Well, thank you very much, Mark. Great to be with you.
Yeah, you can put that on your business card. The funnest guest on TWIFO. There you go.
I noticed that.
We're coining phrases just for you, Dan. All right, you know how it goes. Let's do it, Dan. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. Mr. Dan, we're looking pretty green heavy for the most part on the report this week. So I'd say roughly 2/3 to the upside and about 1/3 to the dark side. But you are our guest, sir. Where should we begin our journey this week? To the light side or to the dark side?
Well, I'd like to start out with that light side.
There is a lot of it. All right, see how much we can squeeze on. We'll limit it to 5 for now, but we'll see. We'll see how many we squeeze on here on the show. To the light side we go. If you want to see this report for yourselves, listeners, give a follow to CME Group on Twitter, or give us a follow on Twitter at Options. We put it out right before showtime. This is one of the few premium reports you guys get access to. Of course, you always get access to the free versions of the TWIFO reports available over there, cmegroup.com/TWIFO. But we also put out this one premium report as well, which is the Movers and Shakers Report. If you want to see that report in more detail, all the other cool stuff that they offer, we just scratched the surface of the data they provide you folks. Go to Bantix, BANTIX.com. Click on the quick strike button there to begin your free trial. But all this, there's literally a ton of things we don't have time to get through on the show, listeners. A lot of great data. If you're even remotely intrigued by these markets, you owe it to yourselves to check that out. Bantix, BANTIX.com. If you did that, you would see that the number 5 light side mover this week is Brent. Man, I'm trying to think, you'll have 4. I thought all 5 were in one complex, but we have 4 of the 5 in one complex. We're going to spend some time talking about energy this week, I think, listeners. Number 5, we've got Brent, up 5.38%. Number 4, good old RBOB, 5.54% to the upside. It was number 4 in the other direction last week, off about 2.75%. Number 3, we have heating oil, up 6.71%. So far, 3 for 3 in the energy complex. Number 2, our lone respite from energy. We go out to metals. It's platinum, up 6.78%. It was number 2 in the other direction last week, off 5.29%. So both RBOB and platinum switching places this week. Same spot, just different side. And then number 1 this week, listeners, WTI up 8.59%. Getting quite the lift out there in the crude space this week. It was number 5 in the other direction last week, off 2.67%. Let's go to the dark side now, listeners. We've got number 5. And again, we have a complex that actually it is entirely, except for 1. 4 again, 4-1 in one complex again to the dark side. So we have very concentrated top and bottom 5 this week, listeners. Number 5, KC Wheat, off 2.25%. Number 4, it is Class 3 milk. So still hanging out in the ags, even though it is in the dairy subset, off 2.26%. So just edging out KC Wheat. Number 3, livestock, lean hogs. So we're still hanging out in the ags, listeners, off 3.02%. It was number 5 to the upside last week, up, I should say, 2.11%. Number 2, our lone departure from ags, or back to energy for nat gas, off 3.74%. It was number 3 in the other direction last week, up 2.5%. And the number 1 dark side mover this week, listeners, soybean oil, off 5.94%. It was number 3 to the dark side last week, off 4.21%. Dan, I'm hard pressed to think of the last time we had such concentrated tops and bottom 5s. It's pretty much all energy and ags this week, with a slight taste of metals thrown in there, sir. So where should we begin our journey this week? What is lighting up your tape first?
Well, do you want to start with energy, since we have so much?
We have a lot of it to do. I think we probably could head out that way first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. Welcome to the wonderful world of energy. Wasn't that the name of Ellen's ride back in the day at Disney? Ellen's Wonderful World of Energy, something along those lines. Either way, you know where to find this, listeners. Head on over to that cmegroup.com/TWIFO page and then go to that asset class drop down. You're going to go down 3 past ags, past crypto to energy this week. And then I guess because it is our number one light side mover, we will start out there in the land of crude WTI. Kicking off showtime, 81.17 up nearly 5 handles or 6.14% just from Monday. So, of course, you go all the way back to the end of last week's show. It's up nearly 8.6%. So a nice little pop here for all things crude. And how much paper has gone up this week? It's another decently active week. 429,000 contracts on the tape. Before I get too excited, though, I'm going to dig and see if I can find any more of those, shall we say, ridiculous verticals. I think I might see some of them lurking out there. So, Dan, while I look for those, why don't you regale us? What is lighting up your tape this week out there in the Texas tea, sir?
Well, you know what's interesting about it, Mark, is we've seen it firm up this past week, but today's action, not a sign of confidence. And if we look at crude, the way it's finishing possibly for today, that implies a down day tomorrow. And I really kind of think personally that crude oil is fairly valued. In other words, we have a range between 75 and 85, basically, for the last couple of weeks. And my feeling about that is that I expect that to continue. Crude needs an excuse to do something. And when we get down below 75 or near 75, what we've seen over the last few days, when we've hit that, or last 2 weeks, we saw buyers coming into that market. And when we get above $82 or $81 to $82, we see sellers coming into the market. And that's what we're seeing today on the upside. Even though we did make new highs, in fact, we went above 83, where we're setting right now is around 81, 81.10, 12. So we backed off from that. Again, we found sellers at those highs. Crude oil right now globally, I think also the demand's out there. The expectation is it's going to increase. People are watching closely weather patterns around the globe. We're looking at the very sad situation in the Ukraine in terms of energy. That's one of the issues now they're dealing with in a way they didn't have to deal with before in terms of electricity and all the things that drive that. So it's an incredibly interesting market. And right now, I just think it's fairly valued. I also thought it would be above $90. Around 90, 85 to 90 is where we've been establishing value for the last few months. But now it got cheaper when we got near that $75. So right now, what I'm looking for going forward is between 84 to 75. Right around that range is where I expect this market to go sideways over the next few weeks. What's interesting, but without new news, what's interesting about it, it doesn't mean there's not opportunity here from a trading point of view. You know, we could do something simple like buying calls and puts. We could put on some spreads as well to take advantage of this potential sideways move. But we want to remember, too, that's about a $10 range. And that in the futures market, in the mini contract or the full-size contract, that's a $10,000 move. So there's volatility. I look for overall sideways trend. And I do think there's some trading opportunity. I do look for a down day on Friday with the structure that we're seeing right now.
You know, Dan, it's interesting times from a price perspective out here, because we have seen a lot of things weighing on demand. And we briefly actually turned negative for the year on Monday in WTI. That seems to be the catalyst. Once we hit that, a flood of buyers came in and drove us back up. So you have a little bit of, looks like, technical buying here on the year. Do you agree? You think that's what just drove us up? We just hit that technical level? Because it doesn't seem like there's much else really driving us north right now, Dan.
I totally agree. We're down here because it's cheap. And that it's attractive to buyers. Price promotes activity, and it's always advertising for the opposite response. So as price drove us down below 80, and now we get below 75, that over the last few months is considered cheap. And if I have to lock in prices because I'm a buyer of crude, I want to start putting some hedges on. And it could also be attractive not only for those buyers, but for other entities that are looking just for trading opportunities. So we do have a technical reference. We do have what I look at on the candle charts, what I call buying shadows, which are a clue that buyers are coming into this market. And then what is driving it? What would drive it higher right now? And is supply an issue? Well, they've talked about cutting back on production. If you look at the Middle East, if you look at our friends in those oil-producing countries, and OPEC Plus controls about 45% of the global supply, they'd like to see crude oil around $90 a barrel because that balances budgets, especially Saudi Arabia. That seems to be their sweet spot. But right now, I don't think we have the fundamental drivers to put us up there. So a sideways move here, I think, does make sense. And I think you're also right. What helps stimulate this market below $75 was technical references, or were technical references.
Just think about it, Dan. Not too long ago, we were talking about the 110, 115 calls. They were in play. They were super active.
Yeah.
When we were talking about all of that not too long ago, would you ever think we'd be back talking about the 80 strike again? Yeah, that's where we find ourselves, Dan. But you know what, Dan? Yeah. If you're nostalgic for those old days of talking about calls north of 100, allow me to present these for you because those verticals are back, listeners. Let's see. This week, it looks like they're dialing it back a little bit. The June 119, 120 vertical went up only 20,000 times this week, listeners. So only 40,000 contracts going up into this week. It's not like 100,000. But there you go, Dan. There's a little bit of the old school strikes, these ridiculous $1 spreads. They continue to go up, even if for a little bit less size. Only 40,000 contracts this week, Dan.
Wow. And you talk about attitude. And that's what's so great about what you show us, Mark, is that it gives us an idea of the attitude of the market. And boy, I don't see where that's really going to happen, but it's an interesting point of view.
Yeah, someone's been putting those on for a while. And for size, I, for the life of me, can't make sense of it. It's just a ridiculous flyer. But they've been doing it for size every week. This is the lightest week we've seen, only 40,000 contracts. Let's get to the real paper, listeners, that's lighting it up this week. We're going out to Jan now. That's the Jan 70 puts. Those have about 14 days to go. So the future out there, still hanging out at about an 81.17. Right now, we have about 14 days to go on these puts. The vol, you may be wondering, what is the vol out there in Jan? And it's about a little bit shy of 48, 47.69, off about 5.6 points. So the vol has come in quite a bit, but it still is very frothy. We were just talking earlier on some shows about VIX hanging out, threatening the 20 handle right now. So you're talking over 2x VIX from a front crude vol perspective right now. So still pretty frothy out there in the energy space. You can see why it's rocking and rolling again this week. In terms of skew, we have the puts last week, 5.7% bid. This week, 6.9% bid. So the put's getting a little bit bid up. Maybe we'll see why in a second. The call's 3.8% cheap. Last week, this week, 5% cheap. So the call's getting a little bit cheaper. And in terms of the action out there, listeners, the number one most active contract in WTI this week, the 70 puts, doing about 14,000 contracts. The big day for those actually today, about 5,100 going up today, 4,500 on Monday, 3,000 on Tuesday, about 1,800 on Wednesday. So there you go. Maybe that shows a little bit of also what's going on from a sentiment perspective out there. We are seeing the put wing getting a little bit juicier, so that could also lean into the fact that on balance, probably opening buys on a lot of these 70 puts. That was followed right behind. We have a tie for number 2 with the 75 puts, 11,300 of those. And then right behind it, 11,200 of the 90 calls. Again, these are all out in January, so about exactly 2 weeks to go. 90 calls and about 11,200 contracts. A big day for those. 4,200 on Monday, 2,300 on Tuesday, 3,500 today, and about 1,300 on Wednesday. The 75 puts, like I mentioned, those are active, and those are active again today as well, 5,800. So maybe looks like a bit of a 75-70 vertical, perhaps going up 5,000 by 5,800 times, somewhere along those lines. Either way, very active 70 and 75 puts out there today in WTI. Let's look a little farther outside of that far upside nonsense, listeners, see if we see anything else. 65 puts also active here in February, going up 6,300 times. Opening all week long, the big day Monday, 3,700, and then 2,300 today. So opening paper on the 70s, opening paper on the 65 puts. Maybe gives you a little bit of an indication of what people are thinking. Listeners, also out to March, about 8,000 of the 67 half puts going up. So 65 too far if you 67 halves going up. Almost all of that on Monday. It looks like this is a little bit different. These were closing. Somebody getting the heck out of Dodge on the 67 half puts on Monday. So perhaps some folks bailing there. So it's not all gobbling up puts all the time, listeners, but there looks like a fair amount of that. Lest we completely look at all the downsides, look really quickly too, all the way out to Dece of next year. We've got the par calls going up about 3,000 times. Looks like somebody's getting the heck out of Dodge on those, listeners. They were bailing on them all week long. Again, a total of about 3,000 on the week. So maybe somebody deciding, hey, the pars were looking good until they weren't. Now we're going to take what little premium we got left and get the heck out of Dodge. Live to fight another day. As we keep on rolling in the energy space, we said it's just dominated by two complexes today, listeners. We got to go out to our number 2 in a lot of your hearts, maybe number 1 for a lot of you out there. And it is number 2 for us on the dark side this week. It is a nat gas coming into showtime now, $6.75, off about 57 cents or about almost 8% just from Monday. If you go all the way back to last week's show, it's only off about 3.75%. So the last few sessions, obviously they are coming for nat gas pretty aggressively. Dan, what's lighting up your tape out there in the world of nat gas this week, sir?
A surprise, actually. See, it chokes me up just thinking about it.
You're breaking up, sir. You're emotional for nat gas.
Yes. And it surprises me. I was looking for a sideways move to stay in place actually throughout this week. Last couple of days, we have gotten weaker. There's a technical reference. I look at what I call a benchmark candle, and we've now traded below that today. Which does surprise me. It would be interesting to see, can we go home short going into the weekend? Because that's what this implies. It implies a down day tomorrow. But I think Friday could be an interesting barometer in nat gas. And here's what I mean by that. If we close weak, so we close near Friday's lows, and that the expectation for that would be between 660 and 650. So if we close someplace in there, but we close at the low, it would imply that people are willing to go home short over the weekend. Nobody got out. On the other hand, let's say we kiss that 660 or 650, we trade down there, but by the end of the session, we trade away from that low. And that would imply to me that buyers came back into that market. The issue is it sellers buying to take profit before the weekend because they don't want to go home short? Or is it like we were talking about with crude oil? Has it gotten cheap enough that buyers now want to come into the market? In other words, to open positions, not close a position. If it is, if we see that shadow on the lows, which implies buyers coming in, the next key reference, I think, for futures is going to be 5 o'clock Chicago time, Sunday night, because that is when this contract will start trading again, because 5 o'clock Chicago time is Monday morning in Asia. Because we want to remember on Friday close, Asia has not had a chance to react. They get to react Sunday night. So if we have a bounce on Friday and Sunday night opens stronger, in other words, buyers continue to move up, that implies we could have had a reversal of these lows. If, on the other hand, we close weak, close at the low, and Sunday night we don't open higher, we open equal to, unchanged, or lower, that implies a potential down day, that sellers are still here in that market. And then the next major reference for nat gas as we go down are about 10 to 20 cent increments, 640, 620. If we do go down towards that range, watch how we kiss or go to those levels. Is it bouncy with shadows on the bottom, or do we close right on top of them, which implies continuation? So it's an interesting market. And I think fundamentally, though, I wouldn't expect to see what we're seeing. I would look for this to firm up. If we look at weather pattern around the globe, and again, if we look at the Ukrainian situation, there's still a lot happening here to drive these prices higher.
Speaking of higher, Dan, funny you should say that. We're at 675 right now. I won't make you guess, but would you ever in a million years have come in here and thought that the most active options contract this week in nat gas was the Jan 10 calls? Because that's what it was. Folks, wow. Slinging the 10 calls again. I guess we're back to those days, Dan. I didn't know. I didn't get the memo. Did you?
Here's the thing, Mark. We're seeing that attitude reflected in what you just shared with us in crude oil. We got those high options out there too, that 119 and $10. I thought we could be above $10 by now, but we got a long way to go to get there. Somebody's got an optimistic outlook.
Yeah, this is, I would not have guessed this here. Again, by the way, it's a decently active week out here, listeners. Back up to about 400,000 contracts exactly in nat gas this week, hanging out about a 675, like we said in that front future. And it was the Jan 10 calls. You just have about 26 days to go. So that's not a lot of time to make your way back to the 10 strike if you are so inclined. And these were trading pretty actively all week long. It wasn't like it was one print. There was a lot of activity on the 10 strike all week long, which is kind of strange. A total of about 14,500 have traded so far this week. The big day is actually today, 4,250 today, 4,150 on Tuesday, slightly closing there. About 3,800 on Wednesday, also slightly closing. And then 2,200 on Monday, slightly opening. So back and forth all week long on the 10 strike. I don't see any other verticals that really line up, with the exception perhaps of today. 3,600 of the 9 calls have also gone up, but the rest of the week, it was just the 10s. So that is strange. What's going on the 10 calls this week, listeners? There is a total of 13,400 contracts open coming into today. So interesting. What's behind this flurry of activity on the 10 strike here, listen? That is interesting. Nat gas going back to 10 in a hurry? Are folks just overriding the hell out of it? Either way, not the strike I would have guessed. This next one right behind it makes a little bit more sense. We have the Jan 5 puts going up about 12,500 times for number 2. Again, we're hanging out 6 3/4. We're moving down. I could see some 5 put action. That makes a little bit more sense than the 10s. 4,000 today. That's the big day for the week. 3,200 yesterday. Slightly opening there. About 2,800 on Monday. More opening going on there. And 2,300 on Tuesday. Slightly closing there. So back and forth action on the 5 puts, but mostly opening, it seems like, there as well. By the way, I got so interested in those 10 calls, I didn't even break down the vol and the skew for you, listener. We're still pretty frothy in the vol, and this vol got annihilated this week. It is still a 95, but it's off 33 points this week. Oh my goodness. They came for this vol. Maybe they're overwriting the hell out of those 10s and everything else, because that's a lot of vol to come in, listeners. And think about that. We're still at a 95, and it came in 33 points. That shows you how frothy. So again, if you're wringing your hands over equity vol, maybe not being where you want it to be right now, you want a little bit more vol in your life, the energy complex is calling your name right now, listeners. Skew-wise, the puts last week, 4.2% cheap. This week, 5.3% cheap. So the puts getting cheaper, again, maybe reflecting this vol annihilation we're seeing here. And the calls last week, 8.2% bid. This week, 6.8 bid. Wow, I'm still just fascinated by the vol implosion and all these 10 calls going up. That is interesting stuff. Let's go a little bit farther out, see if we see any other interesting and or aberrant paper, listeners. 9 calls, also pretty active in November next year. That's interesting. Going up 2,300 times, pretty much evenly split yesterday and today, about 1,150 each. Opening yesterday, I guess probably opening again today. So opening paper on the 9 calls in November. Interesting stuff. And then also you see again that 3 put strip going up in every month from pretty much April all the way out to November as well. So that's been trading every week like clockwork. That continues as well. And then if you go a little bit farther out, it's like it's mostly 3 puts and a smattering of 7 calls out there as well. So yeah, interesting stuff afoot here. I did not expect 10 calls to be dominating tape, let alone the vol to be this aggressive. The Feb vol, listeners, 111 in Nat Gas right now. The March vol, 107. So we know Nat Gas can get frothy, but man, that's a lot of juice, listeners. So there you go. All right. And we mentioned ags are also dominating our tape as well, listeners. Maybe we'll head out there next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everyone. Welcome to the wonderful world of ags. Don't have to go far to find those. They're right at the top of the drop down. Click on the ags. And then, Dan, it's kind of dealer's choice where we go from there. We have soybean oil lighting it up this week. We have lean hogs. We have class 3 milk. We have KC wheat. We have an embarrassment of riches on the ag side. Maybe something else is lighting up your tape. What is catching your eye in the world of ags right now, sir?
Well, I tell you what, let's start with beans. And what's interesting to me about beans, meal, oil, and soybeans, it's the behavior. It's the lead lag effect. You know, typically you expect this complex to march to the same beat of the drum. So if soybeans goes up, you expect meal and oil to follow. But that's not exactly what we're seeing right now in that area. If you look at meal, for example, it's positive today. We're seeing some strength over the last 2 days. If we take a look at oil was bearish 3 days ago. So oil is weak. And if we look at beans is weak today. And if we look at meal is holding its own. It's up. But what's interesting is oil. And I think that's one that we've seen in the past. Soybean oil is interesting also if we look at it from a global point of view. You know, it competes with palm oil and it competes with sunflower oil, which is a major export for Ukraine. About 75% of the sunflower oil comes out of Ukraine. And that means this year we've had some challenges with their issue, which puts pressure on palm oil and soybean oil. But we're not seeing those pieces fit together. You know, it's that fundamental outlook and price action that don't match. You know, and maybe, Mark, that's what we were just exploring in nat gas. We see those higher strikes because people think about it from a fundamental point of view. And from a trading point of view, price dictates what we do. That's how I feel. So even though I may be bullish on a market, I'm bullish on soybean oil, for example. But the fact is, price is going lower, and price puts money in my pocket, and price takes money out of my pocket. So if 3 days ago, if you and I were looking at soybean oil, we'd say, son of a gun. Soybean oil is approaching levels that sellers are coming into the market. And for the last 2 days, it's been down. But if we look at soybean meal, that's been up. That's a protein feed for animals, and we need that. And if you look at soybeans itself, soybeans is one that's firmed up a bit, but it's weaker today. So it's really a mixture here, and I find it fascinating. I'm bullish on this complex, but that's not what price is showing us today.
Let's see what it is showing us today out here, listeners. Like we said, soybean oil, a 67.38 right now is where it's hanging out, off about 4 1/3 on the week, or a little over 6%. Of course, if you go back to the end of the show last week, it's still off about almost 6%. So looks like most of that action has pretty much come this week. And again, is our number one dark side mover. If you're not really sure about volume-wise beans versus the oil, how much do they do? Well, this is no mean week for soybean oil. They're closing in on 100,000 contracts, 98,000 contracts right now on the tape for soybean oil. That compares to about 170,000 contracts on the tape right now for the beans themselves. So you're talking roughly 2-to-1 beans over the oil, but soybean oil, no slouch when it comes to volume. And in terms of action right now, it is heavily concentrated. 77.6% of that nearly 100,000 contracts coming in the Jan month, the Jan expiration cycle, listeners. So I guess we'll head out there. In terms of vol, what is vol in soybean oil right now? Again, another product that is also above the equity vol. 29.20 right now, off about 1 3/4 points on the week. Skew-wise, man. Wow. Huge evolution in the skew this week, listeners. Last week, the puts were 35.2% bid over that at the money vol, which was around a 30. So that was a huge premium to the puts last week, listeners. That is now gone. They are pretty much exactly flat. So that entire 35% premium erased in the put wing this week. My goodness, that is a huge skew move. Call-wise last week, 12.6% cheap. This week, again, flat. The entire skew has just flattened out completely this week. Wow, that is impressive. So we had some interesting equity skew in the beans last week, or I should say the soybean oil. Extreme bid to the puts, decent discount to the calls. This week, all of that gone, all of that wiped off the board. Let's see what was going up out there this week. It was the 65 puts this week, listeners. So slightly out of the money puts, leading the dance with about 11,000 contracts. Almost all of that today. 7,800 today, 1,500 yesterday, 1,600 on Monday, and not much going up on Tuesday out there. Looks like back and forth opening throughout most of the week, but we don't obviously know what's going up today from an opening or closing perspective. Worth noting, there were only 5,300 contracts coming into today. So one would think that is opening, but we'll have to dig in a little bit to see here. So yeah, interesting stuff. 65 puts. I'm guessing there was a lot of sales going up out there to someone. Something had to crush that bid in the put wing out there. Let's see. Also, right behind it, about 10,800 of the 70 puts. And these, unlike the 65s that traded pretty much all today, the 70 puts were trading pretty actively, about 2,000 all week long, opening every day until we get to today. 4,500 going up today. So still an active day today. But these were a little bit more active and even throughout the week. And again, opening all week long. So I'm guessing opening put sales there as well. Either way, something, again, conspiring to just annihilate all this volatility. Then we fall off from there, listeners. The third most active, the 73 puts, about 4,000 of those. A little bit of calls on the tape, not many. 3,400 of the 80 calls also going up in January this week. Pretty much almost all of that today. 2,400 today. There are other 1,000 scattered throughout the week. So intriguing stuff. We have a lot of concentration on the 65 and 70 puts here in Jan in the soybean oil. And again, it's probably sales, given what's happened to that put wing. They really just came for it out there, listeners. But since we're hanging out in the ags, listeners, let's take a trip out there to the wheat. It is KC wheat that is lighting it up, but SRW wheat does a wee bit more paper out there. Also, wheat, obviously, very much in the headlines. I'm sure if we expand that bottom 5 to, let's say, a bottom 6, we'd probably see wheat in there. Actually, it'd be about a number 8. It's behind rough rice, which is number 6, corn number 7, and then Chicago wheat is number 8 this week. So again, it is very ag heavy. We've heard headlines now about Russia stealing wheat out of Ukraine and trying to sell it abroad to try to get around the sanctions out there. So a lot of headlines going on out there in wheat right now. Coming into showtime, we're at about a 782 in the wheat. Dan, what is lighting up your tape in the ever volatile world of wheat, sir?
That's another one. That's a puzzle to me. I look for firmer prices, higher prices this week. I thought we'd be trading above $8 right now. You mentioned we're at 782. I was looking for a positive move. And some of the fundamentals that you're talking about is still out there. There's also a large amount of wheat that was shipped, but it was spoiled. It didn't. We couldn't use it for human consumption, but you can use it for animal feed. So we have that issue out there. And this thing with Russia playing games with Ukraine wheat, it just adds that uncertainty out there of what is going on with supply. What fascinates me, though, is today's action. I really did think today would be trading above $8. From a technical point of view, that was the structure that we were looking at. But if you look at this just 3 days ago, we had a break to the downside. It broke below $8, and it moved down to around 773 or so. And then the next day we were an inside day. Yesterday we had an up day. I think those fundamentals were kicking in. But what we're seeing today implies that's not the case. And Mark, I think it's going to be interesting here to see what happens tomorrow. In other words, it's that Friday issue again. Do people want to go home short wheat into the weekend? And this one also starts a trade again, 5 o'clock Chicago time, Monday morning in Asia. So tomorrow's close, I think, could be an important clue for us in terms of next week's behavior. Right now, it implies if we finish, this has finished, if we're looking now for it to trade down towards that 770. And what will be interesting on Friday, what would be interesting is, do we close below that? Do we just kiss it and bounce right back up? So that behavior, I think, tomorrow will give us an outlook for at least the following week. So it's another market where the fundamentals and the price action just don't match up. So I think, again, for me, price action is the dictator of what I need to do.
Let's check out some of that action out there. Like I said, we're looking at Chicago wheat right now, listeners, doing 112, almost 113,000 contracts. By way of comparison, KC wheat, which is the actual number 5 dark side mover, only got about 7,000 contracts on the tape. So much better product to parse and only a few slots away here in Chicago wheat. Hanging out, like I said, at about a 782, off about 15 handles or nearly 2% from Monday, and off about a similar level if we go back to the end of the show last week. About 113,000 contracts on the tape, 44% of that coming in the March expiration cycle. So we'll head out there, listeners. In terms of vol, again, even wheat vol still hanging out north of equity vol, listeners. About a 28 on the wheat calendar right now. Put-wise, that's off about 2.5 points, I should say. Put-wise, 7.8% cheap were the puts last week, 11.5% cheap this week. So the put skew coming in. The calls last week, 11.5% bid. This week, nearly 14% bid. So puts getting cheaper, calls getting more bid. That is interesting and also makes sense if we're just gently drifting down the skew. We expect it to rotate a little bit like that, but intriguing stuff nonetheless. In terms of action, leading the dance this week, it was the 900 calls in March, going up nearly 6,000 times. The big day, about 2,700 was going up on Tuesday, pretty much all that opening. 1,600 on Wednesday, again opening, and then 800 and 700 Monday and today, respectively, slightly opening on both of those as well. So 900 calls. Interesting strike. Again, we were north of that not too long ago, and all this Ukraine madness first popped off. We saw wheat skyrocketing north, all these fears of global famine, and now coming off that, obviously, but these concerns about Russian skullduggery on the wheat side, maybe not helping matters out there. Right behind it, we also had the 1,200 calls going up 5,300 times. Wow, 1,200 calls in March. Interesting. I'm looking to see if there's any verticals. It doesn't seem like there are any verticals because the 900s were trading pretty steadily throughout the week. The big day for them was Tuesday. The big day for the 1,200s was Wednesday. 3,100 going up on Wednesday, 1,600 on Tuesday, and the rest kind of scattered throughout the week. Closing on Tuesday, opening on Wednesday for the 1,200. So they were trading back and forth during the week, which again, 1,200 calls in March. That would be the 1 year anniversary of some of that skyrocketing pricing, but that's, I think if we get to a 1,200, anywhere close to that again in wheat, we have other problems to worry about out there in the world, listeners. It's not a good leading indicator for the global economy or global health or anything along those lines, or we get wheat back up to those levels. 760 puts also pretty active here in January. The big day for those was Monday, 2,300 of those mostly opening. Then we have 1,100 each Tuesday and Wednesday, only about 500 today. So 760 puts. Those make a little bit more sense. We're trading 782 right now. The rest of these strikes, listeners, are, shall we say, a little bit outlandish, but that is what makes it fun. You know what else is fun, listeners, are the equities. So let's get to them.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wonderful world of equities. Listeners, drop down from the ags, go down 3 more slots to equity indices. We're going to hang out first in Russell 2000. But Dan, before we get there, this has been another topsy-turvy week for equities. We saw Powell coming in, giving a rear shot in the arm to the equity markets. He didn't talk them down this week. So we saw a nice rally in the S&P back north of 4,000. It looks like we're starting to threaten that again, even though it looks like that has mitigated again. It's been another kind of whipsaw-y day out there. What's been catching your eye in the world of equities these days, sir?
Well, I think you're right in terms of what did Powell do yesterday? Were there any dramatic changes? Well, no. He said we got to fight inflation. We got to stay on top of it. What he did add, and I should say what he also didn't say, which he said previously, is that we got rough times ahead. There's going to be a lot of pain. He didn't say that. But what he did say was maybe inflation is cooling a little bit. Maybe the economic things that we can look at imply things are slowing down a bit. If you look at the entire housing sector, permits to new home sales, they've all softened a bit, which implies people are not putting that capital at risk. But yet we see durable goods orders, which are things that last more than 3 years, like appliances and things in that level. Well, people are still willing to buy those. So they have money and they're willing to spend it. If we look at the Cyber Monday numbers, they're looking at $9 billion, and I think it came out like $12 billion. So again, people have money, they're willing to spend it. And it says something about the attitude, about the confidence. And that's reflected in these markets, right? What you and I look at in the S&P, for example, it's the summation of people's beliefs of what's going to happen in the future. And so Powell's comment created a bit of reduction of concern from this point of view. Well, maybe we're not going to go into a recession, or some people may say we're not going into a deeper recession, because the concern truly is, and nobody knows what the answer is, including the Fed, what interest rate level will knock us into a recession. That's that dominant concern out there. If you look at the Fed action, if you go back to late 90s, 2000, when they got to 6.5%, dot-com bubble burst, we had credit got too tight, and we saw the market drop. In March of 2003, interest rates, were 1%. In 2007, the Fed got the interest rates to 5.5%. That choked off that subprime mortgage, and we saw how the market dropped and went down to 0%. So that's the issue here. Is it 5%? Would that do it? Would that knock us into this recession? So that dominant concern is where the market is, I believe. And what we're seeing now with the Fed saying, well, maybe we'll slow down a bit. it alleviates some of that concern. And I think that was reflected in yesterday's action. Now, in today's action, what I mentioned yesterday in the video is that we're not looking for another big day today. The market's doing, I think, exactly what it should do, not much. Yesterday, the market sprinted. Today, the market's catching its breath. And again, Friday, do people want to go home long these indices, or does this market back off as we go into this weekend? So yesterday, the market absorbed the news, and that's it. So if you look at the S&P, I believe what the S&P said to us yesterday, if we look at the low, the low there was 39.42 or so. The high was 40.93. That distance, that move, which was large, is how much Powell's comments were worth to the S&P. That's the way I look at it. And so today, no problem. We're right on target. And tomorrow, I just can't wait to see, does confidence return? Do buyers return to this market? Or do we go sideways or actually collapse as we go into the weekend? So I think tomorrow's going to be interesting.
Let's see what's interesting out there right now. Listeners, get on out to our old friend, the Russell 2000 right now. Small caps have been rocking and rolling of late, as everything has been out there in the equity space, and they are up again this week. Let's see, they're up about 1% net right now as we're seeing kind of this whipsaw effect out there going on in all of the major indices across the board. Actually, somewhat light volume-wise, only about 10,000 contracts on the tape right now in the Russell 2000 out there, which is interesting. Again, that's usually about half of what we're normally used to seeing out here this time of week. And of that, about a third going up in the contract. The D's contract has about 15 days to go. So that's also somewhat aberrant. Usually we see a lot of near-dated paper in the equities, but apparently not today, listeners. 1887 is where we're hanging out in the small caps right now. Let's see. The vol, 25 and about a third, up about 1.38%. Actually, before I get there, speaking of vol, got ahead of myself, listener. Let's set the table from a vol perspective. Coming into the start of this segment, we had RVX, the VIX of the Russell 2000, of course, at about a 24.5, so not that far away from where that D contract is trading right now. That's down about 4 points from last week's show. The VIX itself, 20 and a third, so threatening that 20 handle, listeners, down about 3.64 points out there. So we're seeing that spread come in a little bit. In terms of VVIX, 81, up about half a point. So really kind of unched on the week. Vol Q 25 and a quarter, down about 3 points. That puts that VIX to RVX spread about a third of a point tighter than it was this time last week. And the VIX to Vol Q spread at about almost a 492. That's about 3/4 of a point wider than it was this time last week. And again, getting back to the small caps here, the big dog, 1870 calls. So now in the money calls, going up nearly 1,000 times. That's a big trade for a pretty light week out here. The big day was Wednesday, 600 of those going up on Wednesday opening there, and the rest kind of scattered earlier in the week. Not much going up today. And then we have 1920s also going up today, about 500 times. So weird strikes out there. But again, we're not that far away from either of those. So if we get a nice little pop going into tomorrow or next week, these have about 2 weeks to go. So they still have a little bit of life to them. So we could easily see a 1920. Could we see small caps back at that 2,000 level? I know when Sean was back on the show, he and I used to talk about it. We were planning a 2,000 at 2,000 celebration. Never got around to it before we moved away from it again, listeners. But intriguing stuff nonetheless out here in the land of equity. Speaking of intriguing, we're kind of coming up against it, Dan, but we have a question in the live chat I think may interest you. So let's get to a little bit of your futures options feedback, listeners.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback segment. You guys can hit us up. No shortage of ways to get your question in on the show. Add options on most of the major social media platforms. Questions at theoptionsinsider.com. Also works, of course, if you want to join us in the live, you get bumped to the top of the list. Theoptionsinsider.com/pro is the place to go to get access there. And Dan, we have a question in the live chat coming at you from Nichols. He says, we're just talking about soybeans, Dan. He says, does Dan have a preferred product in the beans to trade? Is it the meal, is it the oil, or the beans themselves? Dan, do you have a preferred soybean product? Is it just as simple as the beans are the most liquid, so you go there, or do you prefer something else in the beans micro complex, sir?
Well, I have to tell you, Nicholas, that's a great question, and they all provide opportunity. It also depends on who you are. If you're a crusher, you look at that crush bed where you're going to be looking to buy beans and sell meal and oil because you're concerned about that price action. From a personal point of view, I do lean towards where there's volume, and that is the bean contract. But you know something? I think it's important, like this week, that you and I pay attention to all of them. I mean, what did we see? We saw 3 days ago oil giving us a clue that maybe we're going to see some weakness in the rest of the complex. So what I think you do want to pay attention to, no matter which one of these markets you look at, is there a lead and lag effect going on? In other words, like this week, is oil leading the way for the other two? So if we're seeing oil weaker, like we would have 3 days ago, would we then say, maybe I should be looking at getting some puts in meal or beans because oil has a tendency to lead, and that's what we've seen for the last 3 months. So I think this idea of how they fit together, lead lag effect, is important when you look at this complex. And I think all three of them really do provide opportunity, although I have a tendency to lean towards the beans. So I hope that helps.
Great question there, Nichols. That music, unfortunately, means we've come to the end. Man, Dan, it seems like we hung out in ags and energy a lot this week, but that's what was lighting it up, right? So the market dictates where we go, Dan. And before we go on out of here, if folks want to reach out to you, they want to see more of the analysis and the content you're putting up on all of these markets, where should they go? What should they do?
Well, they could visit dangramza.com. And there's a free video there. There's a course and more advanced video, but there's a free video there that I do every day the market's open. And we talk about some of the characteristics that we're seeing in 22 different markets. So if you've never traded futures, maybe that's a place to start. It's just to watch them. And if you're only trading equities, maybe there is some opportunities. And like Nichols just asked about beans or some other market complex like metals or energy. So it's a way just to see how someone's looking at these. I provide my thoughts on those markets as well as buy and sell levels. These are not buy and sell recommendations. I just want to share how I view these markets from that point of view. So that could be something to check out.
There you go. Check him out, listeners. Dan Gramza, GRAMZA.com is the place to go for all those great videos. They are good. I recommend them. Check them out for yourselves. DanGramza.com is the place to go. You know where to go to get all these reports we're talking about here on the show each week, listeners. CMEGroup.com/TWIFO is the place to start your journey. Of course, while you're there, you can check out the FedWatch tool. Great research by Blue and his team. Blue coming on the show, I believe, next week or sometime soon. I haven't talked to Blue in about a year. They have great new research we're going to share with you on the show. So that should be fun. It's a lot of great stuff to sink your teeth into over there at CMEGroup.com. And of course, you know where to go to learn more about all things small caps. FTSERussell.com, FTSERussell.com is the place to go to learn more about all those things we talked about when Catherine Yoshimoto came and joined us on the show just a few weeks ago. Small caps, a lot of fascinating things going on out there, not just from a vol perspective, but a lot of different things cooking out there. You can also learn about it if you give them a follow on Twitter at FTSE Russell, all one word. That is going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern. For Vol Views, going to be joined by the Spikes father himself, Mr. Simon Ho, talking about a lot of new stuff. They have some cool stuff cooking over there from a Vol perspective over there at T3 and MyX, and they're looking to share it with you folks tomorrow. So it should be pretty fun. Stay tuned for that. Then, of course, for all you pro folks, back after that for Options Oddities, where Andrew and I break down the entire week of unusual activity and usually talk ourselves into a dangerous trade or two. It's a fun time, to go to learn more about that. TheOptionsInsider.com/pro. We got to get on out of here. Back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.